Okay, a little primer here on the statement of cash flows, talking about cash provided by operating activities here. And looking at this, we've got our old friend ABC Incorporated here reporting the following data for 2018. They have net income of $43,000 and depreciation expense off the income statement of $6,000. From the balance sheet, we can see an increase in accounts receivable from one year to the next, or one period to the next, of $6,000, and a decrease in accounts payable from one period to the next of $2,000. We want to compute the net cash provided by operating activities using the indirect method. So, if we were to have a statement of cash flows here, and using the indirect method, we may see cash flows, and this is from operating activity, so cash flows from operating activities. And basically, what we're looking at, we want to start with net income. So we'll have net income, and this is given to us. We see our net income is $43,000. Okay, and then we want to make our adjustments to reconcile this to cash. So basically, we're going to have adjustments to reconcile net income. And looking at this, the information that they're given, as you may or may not know, depreciation expense, being an expense, is not excuse me, a cash-based expense. So we have to add that back into our net income. So we'll have depreciation expense, and that'll be $6,000. And the other things that we need to look at, we have an increase in accounts receivable here. So an increase, actually I'm going to abbreviate that a little more, an increase in accounts receivable. Now if we think about this, accounts receivable means we've essentially earned money, but we haven't been paid it yet, so we're due this money. So an increase in accounts receivable, if we think about it from a theoretical standpoint, this means that we're not getting the cash that we kind of thought we would be. So an increase in accounts receivable means we're going to see a decrease to cash flows. So this would be a negative $6,000. And then we have a decrease in accounts payable. So a decrease in accounts payable. And if we think about this, a decrease in accounts payable means our accounts payable has went down from one period to the next. So we owe less. And if you think about it again from a theoretical viewpoint, if we owe something, if we owe less to something than we did before, then we must have paid more on it. So basically, this is a decrease to cash flow. So that would be a negative $2,000. Now, if we total things up here, what we'll see, we have an increase from our depreciation of $6,000, a decrease of $6,000 from an increase in accounts receivable, and a decrease due to a decrease in accounts payable means we're essentially looking at the items we reconcile net income to having a negative $2,000 effect. And if we take our net income and put that negative $2,000 effect into play, what we will see is we will get our net cash from operating activities will end up being $41,000, or $43,000 plus 6 minus 2. So in the indirect method, this is what we're looking at. We have to think about how these adjustments we're making affect our cash flow. So again, as always, practice your accounting. Hope this helps with some of the indirect method. This is a primer, beginning thing. Probably be back again with a little bit more. So have a good day. Bye.